Hello, everyone. This is your crypto market update for today. Instead of focusing on short-term price fluctuations, let's take a structured look at what has developed over the past 24 to 48 hours and what it tells us about positioning, liquidity, and broader market structure. 1. Market structure, compression, not breakdown. The crypto market remains inside a controlled consolidation phase. Bitcoin continues trading near the lower boundary of its recent range, holding above key structural support, but failing to reclaim sustained upside momentum. Volatility is present, but it is contained. Trading volumes remain moderate, not expanding. That combination, compression with stable volume, typically signals hesitation rather than panic. Importantly, we are not observing characteristics of structural breakdown. No expanding liquidation waves. No disorderly price gaps. No surge in forced deleveraging. Instead, price action appears reactive and range-bound. This suggests that the market is adjusting positioning rather than unwinding risk aggressively. 2. Bitcoin, range discipline and liquidity sensitivity. Bitcoin recently revisited the mid-$67,000 zone, where buyers again provided stabilization. The $69,000 to $70,000 area continues to act as near-term resistance. From a structural standpoint, support remains intact. Resistance remains respected. Momentum remains neutral to slightly defensive. This is classic range behavior. More importantly, liquidation data shows no systemic stress. Funding rates remain near balanced. Open interest has not expanded aggressively. When markets become unstable, leverage tends to build excessively before unwinding. That dynamic is not present. The system appears stable, not stretched. 3. Ethereum and the altcoin landscape. No expansion phase. Ethereum continues to move in close correlation with Bitcoin. There is no independent strength emerging from ETH. Altcoins remain mixed. Some assets attempt minor rebounds. Others continue consolidating. But there is no broad-based rotation into higher-risk segments. Bitcoin dominance remains relatively steady. This is critical. When capital rotates aggressively into altcoins, dominance typically falls, volatility expands, and speculative appetite increases. That is not happening. Capital allocation remains selective and defensive. This is not an expansion phase. It is a holding phase. 4. ETF flows and institutional behavior, the structural anchor. ETF activity remains one of the most important structural signals in the current cycle. There have been no aggressive outflows from major spot products. Institutional engagement appears measured and steady. If institutions were exiting aggressively, we would expect expanding downside momentum. Instead, flows appear controlled. This suggests strategic positioning. Institutional capital appears disciplined, and that discipline is stabilizing the broader market structure. 5. Derivatives and leverage, contained risk. In the derivatives market, leverage remains under control. Funding rates are near neutral. Open interest is stable. Crypto becomes structurally fragile when leverage builds rapidly and speculative positioning becomes crowded. Currently, speculative excess appears limited. This reduces the probability of sudden systemic volatility events, at least in the absence of external catalysts. 6. Macro drivers. Liquidity expectations dominate. The dominant force shaping the market right now is macroeconomic anticipation. Participants are closely watching upcoming U.S. inflation and labor data, as these releases influence Federal Reserve policy expectations. Crypto continues to behave as a liquidity-sensitive asset. When expectations around liquidity shift, crypto responds. At the moment, the market is compressing ahead of clarity. Liquidity expectations, not narratives, are driving behavior. Until macro uncertainty resolves, range-bound conditions are structurally logical. 7. Infrastructure and systemic risk check. Over the past 48 hours, there have been no major exchange failures or systemic hacks. No regulatory shocks. No geopolitical crypto-specific disruption. The informational backdrop is neutral, and neutrality provides stability. 8. What phase are we in? We are not in euphoria, collapse, or institutional exit. We are in positioning, compression, and structural patience. The market is coiling, waiting for external direction. Markets rarely move decisively without a catalyst. Right now, crypto remains structurally stable. The next impulsive move will likely be driven by liquidity repricing. Until then, consolidation is not weakness. It is preparation. That's your structural update. See you in the next one.